All right, everybody. We're going to get started here tonight. My name is Aaron Fragnito. I'm co-owner of People's Capital Group. And tonight I'm going to be doing a presentation called Where to Find the Most Profitable Real Estate Investments. We'll let everyone jump on here tonight. And we actually do this webinar about every 3 months or so. And our goal is to often come up with new webinars almost every other week. A lot of times we team up with other companies to do webinars. Just last week, I did how new investors get multi-million-dollar mortgages. That was a nice presentation there with another lender, in fact. And we talked about, well, exactly that. We had an open discussion on how new investors get multi-million-dollar mortgages and the lending market right now and interest rates and so on. So that was last week. And then before that, I spoke with Robert Beardsley of Lone Star Capital. We did a LinkedIn Live and talked about how we co-GP and how we raise capital together with other fundraisers and what those details include and how that's accomplished. So every week I try to kind of have a different topic, as you can see. And this week, we're going to talk about where to find the most profitable real estate investments. Now, I actually like to do this webinar every quarter. I also do other webinars consistently as well. I'll repeat topics such as how to self-direct your IRA into real estate. I generally do that about 8 times a year or so. And there's also PCG project updates, which I do on a quarterly basis as well. But tonight, I'm going to talk about where to find the most profitable real estate investments. And I see more people are jumping on here, so that's always good to see. By the way, if you ever want to check out our past content online, that's peoplescapitalgroup.com. We have tons of information up there. And most of the time I'll put up, I have my team put up the presentations we do here tonight. So usually they go up about a week later or so onto our website. We also have on our website, peoplescapitalgroup.com, over 100 podcast episodes. Maybe you found us initially that way from our podcast, the Passive Cash Flow Podcast. And we have guests on that podcast and different topics we cover there as well. In fact, if you want to suggest a guest for that podcast, we're always looking to team up with new people, or maybe you want to come on yourself and tell your story. So maybe you found us through our meetup group of over 4,000 members, or maybe you've been following us for a number of years, or maybe you just found us online searching real estate syndications near me or something like that on Google there. And so I'm glad you could join us here tonight for this live presentation. My name is Aaron Fragnito. I'm actually one of the co-founders and owners of People's Capital Group, and this is a live presentation here tonight. So if you have any questions as we're going along, please type those in the Q&A. We're also live on Facebook right now as well. So our goal is to help busy professionals invest in real estate here at People's Capital Group. And quick disclaimer, it's not solicitation for funds, tax advice, or legal advice here on the date, November 2nd, 2022. We're getting close to, wow, election day coming up, possible changes. The Fed just raised the rates by 75 basis points today. So what does that mean for real estate investors? We'll talk about that a little bit tonight. And again, here's our full disclaimer. Again, not a solicitation for funds. This is not tax advice or legal advice. What we're going to talk about tonight is how we've helped people invest in real estate in the past, what that structure looks like, and how our model of finding mismanaged apartment buildings and buying them for discounted prices is a model that makes sense for us, and why we execute that model here in New Jersey with our passive investor group. So I'm going to touch on that and explain that. And then I'm going to break into our preferred local markets and how we create deals in these local markets. Okay. Surprise, surprise. Of course, a lot of our preferred local markets are here in North Jersey. We are a North Jersey focused real estate investment firm. So there's plenty of ways to invest in plenty of different markets out there. But tonight, I'm going to make an attempt to prove to you why some of the best markets to invest in is the North Jersey market. And I'm going to talk about how we create deals there and explain in depth how we create opportunities in high demand markets where it may seem like there's not many opportunities, or how do you get into a heavily saturated, heavily competitive market. I'm going to talk about creating deals in those markets. And then, of course, if I'm talking about deals, I need to talk about value add, because a deal is only good as how much value you can put into the property. And of course, that's relative to its price also. Value add is when there's a a problem with the property, maybe rents are below market value, and we increase those rents by renovating the units and leasing them up for top dollar. And that's how we create more value to our property. We force the equity up by doing that. So I'll break into our value add strategy as well and our historical performance here at PCG. So let's talk about first our strategy of buying real estate, because that goes into a lot of where the best markets are and how to structure a deal. Okay. So real estate investments are historically an excellent hedge against the bull and bear markets, the stock market in general. We've seen the stock market drop pretty heavily over the last 6 to 8 months now, really about 9 months. And so it's been about a year, actually, a tough year here for the stock market. So real estate hopefully is not going to be following too close behind. We are seeing single family home values drop right now. And we're starting to see commercial real estate values get a little soft, but for the most part, in high demand markets where we focus on, we actually are seeing pretty consistent demand, although deals are starting to come out of the woodwork, which I'll talk about tonight, and how to take advantage of what we might see soon as a buyer's market. But real estate has generated more financial value for more people than any other investment category in history. Right? Most people hold their wealth in their home. What we don't realize is that might not be a terrible investment, a single family home, but it's actually not a great investment. So if you haven't read the book, Rich Dad, Poor Dad, check that out. That'll change your whole opinion of income and taxes and wealth creation. It's a really good story and engaging, easy read as well. But here at People's Capital Group, we pride ourselves on helping others by sharing our experience and expertise. We've done over 100 transactions together, Seth Martinez and I, really over 250 transactions together. And it's allowed us to take our 25 years of experience and invite people into our opportunities so they can get the benefits of owning real estate, like cash flow and equity appreciation and tax depreciation at the end of the year, without having to run around and do all the heavy lifting behind the scenes that landlords and property managers do to make mismanaged apartment buildings perform as managed, well-managed apartment buildings. So we founded our company, People's Capital Group, in 2013, and we really just focus on New Jersey real estate here tonight. So I'll talk about some of the best markets in New Jersey and how we structure deals in those markets. We are completely passive investment option for private investors. That means we do everything from A to Z, from acquiring the property, completing the due diligence, lining up the financing, raising all the capital, and executing a value add strategy over many years and decades so that our investors get to profit from the buildings while enjoying monthly updates and quarterly financials and not having to do all the hard things we do to make that a reality. We only work with select people, though. There is a qualification process. Unfortunately, we cannot work with everyone. We just don't have enough room in our deals for that. There is a process to qualify as well as a sophisticated or accredited investor. But we do have a certain type of fund that is open to a lot more investors than many other funds. So you don't have to be a millionaire to invest with us. And I'll break into that towards the end of the presentation here. We are People's Capital Group. So we work with people. That's new investors, experienced investors, people looking to play 7 figures, and people looking to do the minimum investment of $30,000 and just get started investing in real estate passively. And of course, our mission is to make real estate more attainable to more people. So by accepting non-accredited, sophisticated investors, people that are getting started and really only able to make the minimum investment amount, but at least get started there with investing at the $30,000 minimum. That makes real estate more obtainable to more people. Maybe you work 40, 50 hours a week, and it's just not realistic to look through hundreds of deals and then manage it and then somehow create value in the real estate you're buying. There's so many hours required to do that. So investing with a real estate syndication is how most people build their wealth in real estate. And that's what we are here at People's Capital Group. We are real estate syndication. So here's our preferred local markets. All right. Of course, our strategy is to purchase mismanaged apartment buildings for about 10 to 20% below market value in New Jersey. So we really look for buildings. For example, right now we're buying a 21 unit in Bayonne, New Jersey, and the rents are about 35% below market value. So a building like that, even if rents stop growing today in Bayonne, New Jersey, which is right along the water going into Manhattan there, a very high demand market here in New Jersey. But let's say rents stop growing today, I could still increase the value of that building by 35% or even more, really with the cap rate analysis, and it allows me to boost the value up on that property. That's called forced equity. And we're going to break into that a lot tonight. But when we do that, the first step is finding a discounted price for a piece of real estate. So that's often done actually in a lot of inner city areas. So we've done very well in Paterson, New Jersey. Okay, if you don't know where Paterson, New Jersey is, it's actually very close to New York City. For most of our buildings, you could see the New York City skyline from Paterson, New Jersey there. But it's kind of one of those last remaining affordable markets in North Jersey because it doesn't have great schools. It has high crime. It has a lot of the challenges that a city like Newark, inner city area faces. But we've done very well in Paterson. In fact, just this summer, we returned a 24% annualized cash on cash return to our investors on a project in Paterson, New Jersey. Paterson has a minor league baseball team coming in. It has a local government that's green lighting a lot of development, just like you see in Jersey City, and we all saw what happened there. So we do like Paterson, New Jersey. It is affordable. It's getting less affordable, quite frankly, but we got in there at a great time. We've done very well for our investors in Paterson, New Jersey. Newark, New Jersey. We made our first million in Newark. It's got a soft spot in my heart. It's a beautiful city. It's got a great downtown area. There are parts of Newark you have to be careful investing in. There are other areas where I would move on it very quickly. And the prices have gotten a little crazy in Newark right now. So Fortune 500 companies have their headquarters there. Great public transportation options with Newark Penn Station and New Jersey Transit really allowing you to get in and out of Newark in many different ways very quickly. Universities there, Rutgers University, TCNJ, the Essex County Community College as well. And there's government offices there as well. Proximity to New York City, Jersey City, Hoboken, all the main hubs there. Newark is one of the greatest cities in New Jersey. I believe it is the largest city in New Jersey. So really a great place to invest. If you haven't invested in Newark, New Jersey, check it out. Rahway, New Jersey. We bought a 27 unit in Rahway, New Jersey about a year ago. It's way ahead of schedule. It's in the downtown area. It's about 3 blocks to the train station. It's a great building for our investors. We're knocking it out of the park on that one. Lots of things to do in downtown Rahway. There's an art scene there. There's theaters, great proximity to New York City as well. You have the train station there, New Jersey Transit. You get right into the city in about 40 minutes or so. And allows you to still get a lot of real estate for your dollar in Rahway, New Jersey. There's a prison in Rahway, so that's kind of always kept the prices relatively low. But it's got that great downtown area. It's got a good housing demand as well and a good workforce there. So we're big fans of Rahway, New Jersey. In fact, we're looking at buying a smaller building there, I think it's a 8 unit right now. We're underwriting in Rahway, New Jersey, where we feel that we might be able to snag another great opportunity there for our investor base. Bayonne, New Jersey. One of the reasons we like Bayonne is because the landlord laws are more favorable than, say, Jersey City or Hoboken. See, when one of your tenants moves out in Bayonne, New Jersey, or in Hoboken or Jersey City, New Jersey, you need to renovate the unit, of course, and then go to the rent control board, approve all those renovations that were completed, and then they're going to allow a certain fraction of that investment to be added to the monthly rent. And a certain fraction increase year over year. Now, what the rent control board normally allows is not fair to landlords. It does not allow for any type of decent return on investment. And it really forces you to just not make a good return on your investment there because you're renovating the unit so much. And then the rent control board says, great, you put in $50,000 to a unit, you can increase the rent by a small amount. What we estimated in some buildings where we were buying in Jersey City and rent was like 40, 50% below market value on some of those units, we would have to have invested $80,000 into one unit for the rent control board to allow us to increase the rent over time to what the fair market rent was. $80,000 into one unit's crazy. We don't want to invest that much in renovating a small 1 or 2 bedroom apartment in Jersey City. We might spend $20,000, maybe $25,000 at most, but that's even on the high end. So, it just didn't make sense to buying buildings in Jersey City and Hoboken. So we really don't right now. And in fact, Jersey City or Hoboken is not on this list just for that reason. Now, have people made millions investing in real estate in Jersey City and Hoboken? Of course they have. It's some of the hottest markets in New Jersey, but the landlord tenant laws are dismal in those cities. And I'm not saying there's never an opportunity there, but we just don't like dealing with the shenanigans of all that red tape in Jersey City and Hoboken. They are tenant-friendly cities. They are not landlord-friendly. Now, head down the light rail to Bayonne, New Jersey. Okay, it goes Hoboken, Jersey City, Bayonne, right? Bayonne's been called the sixth borough or so. I mean, so is Hoboken, of course, but Bayonne is much more landlord friendly. When someone moves out in Bayonne, you can increase the rent to whatever the market is bearing. There's 100% vacancy decontrol, where if someone moves out again in Jersey City or Hoboken, you have to go in front of the rent board, prove the renovations you've completed, and you'll be allowed to raise rent by a fraction of that. In Bayonne, it's much more landlord friendly. There's no rent board requirement to go to. Now, if there are rent controlled units, you do have to follow the rules for those rent controlled units. But once those tenants move out, then you can increase the rent to whatever the market is bearing without going in front of the rent control board. So there's lots of ways to amicably have a move out of a tenant, such as cash for keys, or really over time, we find if you just insist that the rent has to be paid on time, people tend to not like having to follow those rules, especially if it was a mismanaged building with mismanaged tenants who've now grown to have bad habits and maybe miss a month. We've had tenants there where they said, well, the landlord would always let me skip a month. And we said, well, we don't let you skip a month on rent. They would be every other month they wanted to pay rent. They thought that was okay. And we'll run into situations like that. So in those scenarios, those tenants tend to end up in eviction because they can't keep up with the rental payment. So there's many different ways to turn over units and bring mismanaged buildings back to life by renovating the units, leasing them out to tenants that can afford the rent. And Bayonne, New Jersey, we find a ton of opportunity there. So that's one of the reasons we're buying a nice apartment building in Bayonne right now with rents about 35% below market value. In fact, if you want to learn more about that, I'm going to put the link here in the chat just to briefly. We have plenty more to talk about tonight, of course, but I figure if you have to run at any moment, that's the link to schedule a call with me. By the way, if you have questions, please put them in the Q&A or put them in the chat. I encourage questions as we go along here, and I'll answer those at the end of the presentation here tonight. Morristown, New Jersey, strong property values. Neighboring towns offer great value as well. We love Morris County, Morristown, New Jersey. With the pandemic happening, a lot of people are able to live a little further out from the city. Morristown's a great example, or Morris County in general, of where people are moving to. I mean, they've always moved to Morris County. It's always been a high demand county here in New Jersey, kind of rural, but becoming actually more populated now as time goes on, as really all of the world is, especially New Jersey. And then there is a train line going out of Morristown right to the city as well. So if you need to commute to the city, maybe 3 days a week or so, like people are doing now, that's very reasonable from Morristown. Plainfield, New Jersey, it has a direct train line to New York City. There's strong rental demands, great workforce housing there. Definitely get a little more real estate for your dollar there as well, as far as central North Jersey markets go. So there are parts of Plainfield I would be cautious investing in, but I think in general, Plainfield's a nice small city to plant your flag and own some real estate in. And I've owned real estate there for years. It's done very well. In fact, most of all of these cities we've owned real estate in. That's why I'm suggesting them, because we've had good experiences investing there, and we continue to today for our investor group. Berkeley Heights, New Jersey. Our office was there for 6 years. We just moved to Somerville, but we love Berkeley Heights, and really that whole 78, a corridor there, the Gladstone line on New Jersey Transit there. I know my dad grew up taking the train in from Millington every night, so every day. Really a great area there, Berkeley Heights, New Providence, Summit. Those are great towns to invest in. The only challenge is there's not a whole lot of opportunities to buy things like apartment buildings in those areas, and you tend to pay so much to get them that they're hard to cash flow on. So we have to be creative. For example, we bought a complex that's affordable housing in Berkeley Heights, but in 3 years, the affordable housing has the option to expire. So we can then convert it to fair market housing. So a huge value add play, right? If you have affordable housing, you're restricted on what you can charge for rent. Generally, it's around 50% or so of what you can charge. You're also restricted on who you can rent to. The state has to approve them. It's a huge bureaucratic nightmare getting tenants in there. However, once we are able to convert it to fair market housing, and the zoning restriction expires in about 3 years or so, we're going to boost the heck out of that value of that piece of real estate there. And we're going to ideally try to double that value in about a year on the building as we renovate units, bring them to fair market, lease them up for fair market dollar, and create essentially a whole new product there at a whole new value for our passive investors. Somerville, New Jersey. We've moved our headquarters here to Somerville, New Jersey. There's lots of development going on. If you've ever driven through Somerville, New Jersey recently, you'll see cranes in the air, and they're building a bunch of condos here and mixed-use real estate. Beautiful downtown area. Somerville struggled for a little bit of time. I think when the Bridgewater Mall came in, it probably took away from that a little bit, but it's really been doing a lot better in the last decade or so, especially just the last 5 years. This downtown area has been very nice, a very fun place to get lunch, and it's got a direct train line to New York City as well. But yeah, cute little West Jersey city here, and it's not like overexpanded yet. So I think there's a lot of room to grow here in Somerville. New Brunswick, New Jersey. We love the Brunswicks in general for Rutgers University. Generally, if you can get in around somewhere like Rutgers University, which I've owned real estate near Rutgers University in Newark, which has done very well. But in New Brunswick, you have even more of it, right? The campus is much bigger. That's their main campus there in New Brunswick. So tons of opportunity there. Of course, it is kind of a pricey area to get into, and college housing, you have to know what you're doing with the management of that and who you're leasing to and so on. West Jersey in general, like the Northwest Jersey market here. The pandemic has forced a lot of people or allowed a lot of people really to move out to the suburbs. That may have meant Maplewood for some people. It may have meant Chester, New Jersey for others, or Mendham or something like that. So beautiful areas in West Jersey. And right now people are moving out to those markets. And speaking of West Jersey, we have Trenton. Trenton, New Jersey is an area where, I'm not going to put all my eggs into Trenton there. I think it's definitely has a lot of potential. I might hit the brakes a little bit on buying anything right there right now. We were looking at a building there. We ended up passing on it because of a number of reasons, but also the Trenton market in general, in a recession, will lose value first over a lot of these other markets I'm identifying. I think markets like Bayonne, New Jersey are going to hold strong. Morristown, Berkeley Heights, the Brunswicks, even Rahway, Morristown, I said that. So that Somerville should hold its value as well. These are stronger markets. Trenton, I could see in a recession having a bit of a dip in property values, but it is our state capital here in New Jersey, has good infrastructure, many transportation options. You're about an hour north of Philly or so there as well. And so these are some of the markets we prefer investing in North and Central New Jersey. Okay, so let's talk about creating a deal. As I explained in the description of this webinar, this presentation isn't really about the highest growth markets or the markets where you're seeing all the jobs come in, and for this reason and for that reason, you should be investing there on this statistic or that statistic. This is more about how we create deals in the markets we're familiar with. The dozen or so markets I just mentioned, those cities and towns, those are great areas to invest for multiple reasons that I just explained. But they're also good, really part of creating a deal or finding a good deal in real estate is creating the deal as well, right? So not only the location you're buying in, location, as they say, is extremely important, but it's also the structure of the deal, of course, and that lands on the price you're paying for it. So at the end of the day, real estate is always worth something and at least $1. So, it's really about what are you going to do with the property? What's the best price you can get on it? What's the terms that make sense for you acquiring the property and for the landlord as well, the person selling the property? And how do we create good deals in any market? Well, the first step is finding a landlord or a realtor that sells mismanaged buildings in your target market. You want to be very specific when you're investing in any asset class, especially with real estate. So we buy mismanaged apartment buildings in North and Central New Jersey. We manage them with our in-house management company. So we look for landlords that are getting to a certain age. Maybe they're over the age of 60. And they've owned the building for some time. The building we're buying in Bayonne, New Jersey, for example, is family owned for 40 years, well managed, well maintained. Rent collections are at 100%. The building has this pride of ownership that we really enjoy. Good maintenance overall, very little deferred maintenance, if any. And 40 years of ownership, they really haven't raised the rents, though. They haven't kept up with the rent increases overall. And because of that, rents are way below market value. So we can buy the property for a discounted price. Now, normally we are buying properties that need a little more work, that are a little more mismanaged. In fact, the building we were looking at in Trenton, New Jersey, had a lot of red flags. And that's one of the reasons I just wrote an article and did a podcast called 7 Red Flags for Passive Real Estate Investors, because I found a lot of issues with that building, and some of them are mentioned in that article. And the deferred maintenance was just getting worse and worse and worse. And the partners had to break up internally, and they couldn't communicate. They just couldn't get the management done on the property and manage the supervisors and accept new tenants and whatever it took to agree on things and manage that building the right way. The business was failing, the management was failing, and the building was kind of just falling into more and more disrepair and mismanagement. And the more layers we uncovered, the less I liked it. And then the market started dropping and rates started going up. So we did end up passing on the opportunity. But perfect example of a landlord in a mismanaged building. He just wouldn't give us the right price. And unfortunately, that is how most negotiations go, right? You're like, hey, the building has all these challenges and, problems. And because of that, I need this price. And for years, landlords have been saying, well, there's the door, right? Now, we hope that conversation will start to change and the buyers will say, listen, this is the price I need, and da-da-da. And we could say to the seller, if you don't like it, there's the door, of course. And that's more of a buyer's market where the buyer's a little more in control. We're not quite seeing that yet, but I do feel that's on the horizon. Not in any type of big collapse, but just in the sense that, we've been in a seller's market for so many years. There are less bids on the properties we're bidding on now. And we are finding prices are a little less aggressive than where they had been in the last 6 months or so. But that's the first step here, finding that landlord or that broker that is selling a mismanaged building. If it's a broker, build the relationship just like you would a landlord. Go out to lunch, get a cup of coffee, meet at the property, do what it takes to get in front of them in person and build that rapport. People like to do business with people they like, right? They want to give their hard-earned money to people they like, people that are likable. So that's the first step. Build that rapport. What's step 2 here? Build a rapport and display your value to the landlord or the broker. Now, quite frankly, in the last few years, we have been finding most of our deals through brokers. But for many years before that, we did find a lot of deals through direct mail marketing, which we're starting to do again more aggressively. In fact, we're about to hire someone to put up those "We Buy Houses" signs on telephone poles as well. So if you know anyone that wants to do that, we are hiring. But step 2 here, build rapport and display your value. All right. You want to make sure the landlord or the broker understands how serious you are about closing, your capability to close well. Maybe you're taking back a mortgage. The seller's taking back a mortgage. You want to display you're a good borrower, of course. Or maybe you're getting a mortgage from a bank, that you have the ability to get that. You have the ability to close quickly on the property. You're not going to waste their time with retrading on small problems when you do your inspections. Now, if you find a big problem or an environmental issue, yes, you want to retrade or renegotiate the price. But for the most part, build that rapport with the broker or the owner, display your value to them and what they need to see, that you're going to perform as a business person and that it's someone you want to do business with and a person with integrity and respect. Step 3, discuss the landlord's needs and make an offer answering those needs. I've had landlords say, my brother needs to live in one of the units for 6 more months till he gets his life together. It's never 6 months. And we all have that brother. And or maybe they'll say, I just need to close very quickly, or I need to pay off this mortgage or this debt, or I want to make sure this guy stays on payroll, which is a tough one. We really don't like. There's ways to work with that and kind of, structure that for a little bit of time. But if they really don't perform, you don't have to stay on payroll. You are allowed to fire people that don't perform. So there's been all different types of needs there. I've had owners say they want to continue to profit from the property after selling it. Well, that sounds a little ridiculous. However, that's a great request because you know what? Maybe they can hold some paper and earn interest rate on some of the money they were going to receive from the sale, but instead of receiving that, maybe they hold a note of some type and earn an interest rate on it. And that can allow you to have to come to the closing with less funds on your ends. It's called seller financing. That's always a good possibility there. So understand what the goals are for the landlord, what the issues are, the problems are. And a lot of times, yes, it is price, right? They want the best price possible. And so in that case, of course, you want to just try to be in the middle on price and terms, the length of time you need to close, and so on, and your contingencies that you're asking for. So that can differ from deal to deal, but sometimes it's not always price. There can be different things. I've had 10 landlords say, I don't want you to remove, this tenant, right? So that can be a thing that you might try to work with for a period of time as well. Step 4, close with integrity and ask to buy more of their properties. This is a good one, right? One of the best sources of new deals sometimes can be landlords we've already done business with, or especially brokers we've already done business with, because brokers just want to sell you more real estate no matter what, because that's how they get paid. It's understandable. So once you close with integrity, do business with integrity, do what you say you're going to do. Do it effectively. And if you need to retrade, explain why. If you need a better price on it, hey, we found this problem, or the markets have changed drastically, right? Explain why you need to retrade and then close on that new number if you get it. So you can retrade with integrity. You can renegotiate your price with integrity. But make sure you close when you agree on the terms and price. Make sure you do what you say you're going to do in the timeline you're going to do it. And don't be annoying to do business with. Oh, I need this or that, or last minute reneging or anything like that. Oh, that's the most frustrating thing, right? So be a person of your word. And then as soon as that check clears for the broker or the landlord, say, hey, my friend, by the way, we try to buy 1 or 2 of these a year. So if you have anything else coming down the pike, before you call the buyers on your list, before you call the broker to sell your property, call me. Save on a realtor commission, right? If you met the broker directly, if you met the landlord directly through direct mail marketing, your pitch to the landlord is, hey, save on hiring a realtor and paying a realtor commission. Sell the property to me, right? Now you're thinking, the 5% you're going to save is going to come off that sale price if I even save at it. But of course, you're going to try to be in the middle there with the seller. And that is a great way for you to get a good price as a buyer, because if the seller doesn't have to pay a broker, then the seller can give you a better price. Or if you bought the property from a broker, brokers would love to sell you more properties. Say, hey, we're able to do this, in 4 more months, or we're able to, buy another property in the next 6 months. Let's see what else you have. But before you send it out to all your buyers, you should call me, because I close, I do business with integrity. And Mr. Broker, wasn't this an enjoyable transaction? Yes, it was. We even laughed at the end. So that means next time you have a deal like this, because you know what I want now, bring it right to me. And guess what? Those brokers do, because they don't want a headache. If you think brokers really want to list properties, deal with 1 million buyers and guess what? The offers all usually kind of coming around the same price anyway. So if you have a few good buyers, generally the brokers are just going to go to those, 5 to 10 good buyers. We'd like to think it's 1, right, coming to us, but that's how we got this deal in Bayonne. The broker came to us and said, hey, I have a perfect deal for you. It's right up your alley. I know exactly what you're looking for. I've done business with you before. We know you're good buyers. Here's the price. I know the guy's not going to take less. If you don't give me this price, I got to go out on the market and get bids. The bids are going to come in higher than this. And we knew that. So we did our due diligence. We hemmed and we hawed. We tried to get it for a few $100,000 less. Realized, hey, you know what? This is a good price. This is a great deal. There's a ton of value add. It's in a high demand market. It's a well-maintained building. It's right up our alley, but the rents are just 35% below market value, but there's not a whole lot of work to do to get those rents up. So it was like, yes, let's move on this quickly. We made a decision in 24 hours. We accepted the number that the seller was willing to sell to us for, which was below list price. And we moved on the property quickly, and no one else knew about it until it was too late. So we had a signed letter of intent and we were moving to a contract. Now, the broker does have a fiduciary responsibility to, at one point or another, put it out to the market. But here's the thing. If you already have a signed LOI, and you're moving towards a contract, it's very unlikely that seller's going to back out and do anything else, especially if you have a good broker who, by the way, the broker also represents you, the buyer, right? I'm not going to have my own broker come in and split the commission. The whole idea is that broker represents me and it represents the seller. So the broker's getting his full commission. So you better bet he's going to come to you as well for, the financial motivation there also. So at the end of the day, the broker wants to keep that deal together. He doesn't want to deal with the other offers from other brokers or even other offers from other buyers, because other buyers are going to have their demands as well and their caveats. So you really want to just move forward as quickly as possible. And there were other offers that came in because he did have to kind of put it out to other buyers after he got our LOI signed to appear like he's moving the property ethically and properly for the seller there, of course. And that's his job, to get more offers on the property. That keeps us honest. And those offers came in hundreds of thousands of dollars higher than our offer. So by having that relationship in place with the broker, by getting that call and being able to react in 24 hours on the right deal at the right price, we've probably saved about $300,000 on the purchase price. In fact, the deal just wouldn't have happened. We wouldn't have paid that much more for it, and we would have just still been shopping for a deal. So that is the best way to get deals, right? It's kind of the chicken and the egg. You got to close on a deal, put some money in a landlord or a broker's pocket, and they're going to bring you more deals. That's one of the best ways to get deals. If you haven't closed on a deal yet, you're shopping around for your first one, or you're trying to build a relationship with a broker or a landlord, again, doing that rapport, going out to lunch, saying, hey, I'm a serious buyer. Here's my package, like I would give to an investor. I'll give that to a broker as well, right? Talks about our historical performance, our strategy here at People's Capital Group, our mission statement, and it shows we have a true long-term business plan here, that we're going to be in business for many, many decades, generations is really our plan, legacy wealth for our investors and ourselves, for my child to hand it down to him one day. Maybe a nice 7 zeros in there or so, and 8 or 9, that sounds good to me. And that's the whole idea of legacy wealth to hand down to your heirs for years to come. And when you explain that to the brokers, hey, I'm planning on doing this and building this wealth for my, then they'll understand and try to bring you deals. So even if it's your first deal, you can often do that. Okay, so that's how we create deals. Okay, I talked about some of the best markets as well that we like creating deals in. And now once we buy the deal, or the reason we buy the deal is because it has value add. Value add, once again, is something we can do to increase the value of the property, force the value up by increasing the rent roll of the property. This can include improving the amenities. Maybe there's an old gym that's being used to hold construction material that you can bring back to life and use to increase the rent roll on the building and attract better quality tenants. Maybe there's laundry or storage you could put in the basement and create more forms of income. Maybe the parking as well. There could be options there for more forms of income. But the most common way we improve the value of a building is by simply renovating vacant units and then leasing them up for top dollar. So, of course, we have to work out amicable exits with the tenants. That can involve cash for keys, or simply not renewing leases as they expire, or evictions for non-cooperative tenants as well. Once we renovate the units, of course, we try to do that quickly and economically without breaking the bank, but also creating a nice unit. Sometimes we go a little above and beyond. Like, for example, in Rahway, New Jersey, we're renting 1 bedrooms for $1,500. We're renting studios for about $1,100 to $1,200. And what we're doing there is we are putting in like a little nicer than usual appliances and finishings. For example, on the 1 bedrooms, we have motion censored sinks. So that's really nice. I don't know that in my house. We have a motion censored sink. You can put your hand in front of it and it turns right on, your kitchen sink. It's really a very luxurious little feature that you see at like luxury hotels or something. And so we installed that into our kitchens in Rahway, New Jersey. Okay. Now, that building is doing phenomenal regardless of that. But that's just one little thing we do. Now, maybe that sink cost me an extra $100, $150, something like that. But I'm going to earn another $50 in rent likely per month because it has that feature, or just attract a better quality tenant, or get so many more applications and be able to pick the best tenant or line up more tenants for future vacant units. And it's all about creating that value for your tenant, not only through improved management of the building and putting your best foot forward there, but also improving the buildings physically, leasing them up for top dollar, And we try to do that over a 2 to 3 year period. Our goal is to improve the property and refinance in about a 3 to 5 year period. And by increasing that rent roll, by all those avenues I just explained, we force the value of the building up, and then we harvest that equity growth through a cash out refinance. Now, the best thing about the cash out refinance is that it's tax free as long as our investors stay invested long term. There are exit options along the way I'll go over, but at each refinance, the investors can exit, get back their initial investment, keep the funds from the refinance, keep the funds from cash flow, and pay capital gains tax on their earnings. So a better tax strategy is to stay invested long term, keep earning that big refinance check every 3 to 5 years as we continue to reposition the building. And our investors, I plan to get back about half of their investment every 3 to 5 years. Keep earning cash flow as well on the property on a quarterly basis. And it's just a great tax strategy because the majority of the funds you're earning on the building is from the refinance, and that's non-taxable income. See, because that's debt, right? It's good debt that our tenants are going to pay down for years to come. Generally low interest debt that's secured by the asset. And the bank's not going to let us take out more of a mortgage than the property can afford. So it's safe debt. It's good debt that our investors don't have to sign for. People's Capital Group does, but our investors don't. But by harvesting our equity growth through the use of debt, through the use of refinance, which every property owner does in commercial real estate, very common structure, and then dispersing that excess cash to our investors, that's a way to harvest equity growth, put cash into our investors' pocket, but not have them pay capital gains tax on those earnings. So that's how the cash out refinance strategy works. I know I'm kind of moving through it very quickly here. This presentation isn't really focused on that. Of course, this is where the best markets to invest in. But part of investing in good markets is investing with good strategies. And part of a good strategy is not paying taxes, not having to pay tax, right? Legally avoiding tax, right? That's the name of the game. Legally avoiding tax, right? What's the two things in life that are certain? Death and taxes. So by paying yourself the right way through refinance of real estate as you improve assets over time and harvesting that equity growth, and allows for a big liquidity event into your bank account, but you don't have to pay taxes on that cash coming into your account. It's a phenomenal way to beat the tax man legally and build your wealth exponentially and harvest that equity growth without having to sell the property, lose your cash flow machine, lose your tax depreciation machine, and get nailed on taxes, because that's what happens when you sell real estate, not using a 1031 tax difference. But anyway, on the right here is our improvements. For example, for this 27 unit in Rahway, New Jersey, just a general outline of our improvements. And you can see here, we renovate certain units with a little more, other units a little less. There's a large contingency there as well. And we have other things to do, such as roof repair, the front exterior of the building, landscaping, basement cleanup, laundry facilities, lobbies, and so on. So we'll wrap up here over the next few slides and we'll open up for questions. Again, if you have any questions as we go along here tonight, please type them in the Q&A. I always encourage questions from our listeners. But here at People's Capital Group, we really focus on helping people invest in real estate. We don't actually work with any hedge funds or family offices. We really just help people invest in real estate. And about 90% of our investors reinvest over time. So we have over 55 private investors that participate in our private offerings. We have a little over $40 million in real estate transacted, about a $20 million portfolio today with about 150 units. We're purchasing this building in Bayonne, New Jersey here. This nice 21 unit property we're buying with a huge amount of value add. You can see in the pictures here, it's actually a really nice building. It's very clean, beautiful lobby there, and really doesn't need a whole lot of work at all. So that's the type of real estate we try to buy, mismanaged apartment buildings in decent shape that just really need cosmetic improvements to increase the revenue on the building, increase the rent roll, and complete that cash out refinance for our investors over time. Now, when we do that cash out refinance, every 3 to 5 years, our investors can exit, get back their initial investment, keep the funds earned from the refinance, keep the funds earned from cash flow. So you made a $100,000 investment in a building. At the refinance, you received $50,000 back, which is always our goal, to get back about half your investment in the refinance. You choose to exit. So you'd walk away with $150,000, right? 100 being your principal investment, 50,000 being the profit from the refinance. Maybe say another $5,000 in cash flow as well. Cash flow is not as strong on these properties, but we aim to get about 2% a year or so in cash flow from these buildings. So in that case, the investor would have invested $100,000. Say at year 3, we do the refinance and they walk away with a total of $55,000 in profit. That's $50,000 from the refinance and $5,000 in cash flow. In that case, they would be walking away with 155 in total, 100 being the principal, but they'd have to pay capital gains tax on that $55,000 of earnings. So most investors remain invested over time, keep enjoying that big $50,000 lump sum or the half of their investment back at each refinance every 3 to 5 years, about 2% or so in cash flow each year as well. That's written off with tax depreciation. So therefore, the whole investment creates no additional tax burden and allows them to create a double-digit cash-on-cash return between the cash flow and the refinance. They also enjoy monthly updates and quarterly financials. Historically, we've achieved about a 10 to 24% annualized cash-on-cash return. Okay. This year, we did a project at Paterson that achieved a 24% annualized cash-on-cash return in Paterson, New Jersey. We did another project in Passaic, New Jersey. That project achieved a 16% annualized cash-on-cash return for our investors in Passaic, New Jersey. Also a great market to invest in. Little note here, historical performance is not a guarantee of future performance. The SEC requires me to say that. Okay, so let's break into the responsibilities of People's Capital Group and the responsibilities of our passive investors. So, of course, we're responsible for locating a good investment opportunity. We will look through hundreds of bad deals to find one good one, negotiate and perform due diligence on the asset. Of course, our investors can review all this information as much as they'd like, and then we present the real estate investment opportunity to our investors. We obtain a mortgage and guarantee the mortgage often as well. We raise all the funds required for the investment and sometimes put our own capital in as well if required. We manage the asset in its entirety with our in-house property management company. See, we're a vertically integrated real estate investment firm with an in-house property management company. And we perform the value add strategy through the entirety of the investment, as I explained in the last slide or two about how we improve the value of the building by forcing the value up by a number of different avenues, improving the net operating income, and then harvesting that equity growth over time with a cash out refinance. Okay. Cash out refinance is generally accomplished within 3 to 5 years. And then we try to do a cash out refinance similar to that every 3 to 5 years thereafter. Eventually, we do plan on selling the buildings through a 1031 tax deference, trading into a bigger property, maybe selling some smaller buildings and trading into a much bigger property, and exponentially building our investors' wealth along the way. Bigger is better in real estate. And as we trade into bigger properties, we defer all taxes through the 1031 tax deference. It's an incredible tool that the billionaires of the world have used to build their billions for years. And we allow private investors to use this tax tool to build their wealth indefinitely, the 1031 tax deference. So we really like to build legacy wealth for our investors. That's our main goal there. And that's why we use this strategy. So the responsibilities of the passive investors is they must qualify as an accredited investor or a sophisticated investor. So most funds only accept accredited investors. That's someone that has a net worth of $1 million, not including their primary residence, or has a household income of $300,000 or a personal income of $250,000 per year, and the expectation to earn that next year. So most funds only accept accredited investors. So those are essentially millionaires. Now we've developed a fund to also accept sophisticated investors. These are individuals with the experience of investing in real estate, meaning they've reviewed investment opportunities before in real estate. Maybe they bought a home as well or something like that. And they have some experience investing or reviewing investment opportunities in real estate. And they have the mental capacity and experience to understand the risks of the investment. They also don't need to live on the returns of the investment. We're not accepting their last $30,000 or something like that. And they have ample income and savings. So Most people in middle class here in America qualify as a sophisticated investor, and that opens the door to a lot more people to invest in People's Capital Group. So we accept multimillionaire investors and sophisticated investors getting started. Sometimes they just invest the minimum investment amount of $30,000. We've also had people place 7 figures with us, and we're happy to work with anyone on that spectrum and help you put capital to work in real estate as long as you are accredited or sophisticated. The second step is after qualifying, you must be selected to invest. Okay, that's through a discovery call process where we're actually going to jump on a call and talk for about 15 to 30 minutes about your investment goals, answer any questions you have about how we help people invest in real estate here at People's Capital Group, and make sure you do qualify. Okay, so that's the first step, the discovery call. To do that, you want to click the link I put in the chat. After that, you're going to review the information for the offering. Again, have another conversation with me, most likely, and answer more of your questions and to determine if it's a fit for your investment goals. If it is, you would sign the documents online, very simple process, procure the approved fund with the title company, and the investor does not personally guarantee the mortgage or take any responsibility in the management of the property. They enjoy monthly updates and quarterly financials, along with quarterly cash flow checks. So here's a few reasons why PCG investors benefit by investing passively in real estate and not doing all the heavy lifting themselves. First of all, more quality time. A lot of people that invest with us work 60 hours a week. There's no reasonable solution to analyze hundreds of buildings, manage management companies, and really actually successfully put your wealth to work in real estate on a large scale. Maybe you buy a condo or two or a single family home, but owning mismanaged apartment buildings and bringing them to life and repositioning commercial buildings is not realistic for someone working a full-time job. So we bring this opportunity to them so they can continue to do what they do best, earn those high wages by doing what they do best and putting food on their plate for their family by building their wealth also passively with People's Capital Group year over year and building that legacy wealth in the background that we do for them. So no experience in real estate is necessary. You do have to have some experience reviewing opportunities or have the mental experience to understand the investment risks. It is also true diversification of your investment portfolio out of the stock market into true brick and mortar real estate. This is not a stock backed by real estate that rides on the Dow Jones. This is not a REIT. We are a real estate syndication, and each person is invested in one particular project, and they'll get updates on that particular project and financials as well. If you're invested in multiple projects, then you would get multiple updates and multiple financials for each project you're invested in. There's an investor dashboard that our investors can log on to, get all their information on their investments of People's Capital Group. We've been told it's kind of like Vanguard or something like that, where you can log on, take a look at your investment dashboard, but instead of being invested in the stock market, you're invested in brick and mortar real estate. Also, ownership in high demand real estate, right? We're not investing in secondary, really like lesser known markets. We're in high demand North Jersey markets here where there are barriers to entry. It's hard to get deals here. It's very competitive, but we are able to source deals by a lot of the avenues I spoke about in this presentation. We work on best practices in contracting and sales, so we treat everyone with our best foot forward. If you're investing millions of dollars with us or you're one of our Section 8 tenants, we're going to treat you the same way with respect and integrity and make sure that you have a good experience doing business with us. Maybe you're one of our contractors. Maybe you're the company that we hire to clean the hallways and take out the garbage. It doesn't matter what you do. If you work for us, you will be treated with the best integrity and respect. And we do that, of course, with our investors and our service providers and our tenants and anyone we do business with. Professionals who do the work for you. So, of course, we do everything from A to Z, and that allows investors to feel confident investing in experienced professionals. We've kind of made the mistakes through the years. We've taken our hits. We've learned how to do this the right way. We've developed a very good staff with our in-house property management company. So when you work with a real estate syndication, when you invest in them, you're really hiring professionals to do a job for you, to do a specific service for you. Find a mismanaged building, reposition it, and create as much profit for you as we possibly can from that piece of real estate. And so you're hiring professionals to do that job for you, just like you do when you get your hair cut or go to a doctor or go to a fancy restaurant. Options for self-directed IRAs and solo 401ks. So about a third of our investors use a self-directed IRA or solo 401k. So check out that option if you haven't. If you're curious about that process, I have plenty of webinars on that. You would just select an IRA custodian, connect with them, move the funds to that IRA custodian, and then move that into a real estate investment opportunity with People's Capital Group. We're very IRA friendly. We've worked with a lot of IRA custodians. In fact, if you're looking to select the right one, I could even help you select the right IRA custodian. I have a number of them I suggest, and even someone who helps people select the right IRA custodian for their goals. So work with that person as well. So here's the founders of People's Capital Group. This is me, Aaron Fragnito. I'm one of the managing members here and co-founders of People's Capital Group. That's Seth Martinez, my business partner there. He owns the other half of People's Capital Group. So Seth is more in charge of the operations end of the business, managing the management company, due diligence initially on the assets. I also do due diligence, another round once we've selected the right asset to move forward on. Overall company management and internal operations is also what Seth keeps his eye on here at People's Capital Group. I focus on investor relations, marketing, branding. I'm more client-facing, and education as well is one of my main focuses. We don't sell education, but I do actually, I was hired by Rowan University just for this semester to write and teach a course called Real Estate Entrepreneurship. I graduated from Rowan University with an entrepreneur degree in 2009. Great university there. And I had the honor of being hired back there. At first I said, no, I don't have the time, but then they kind of talked me into it. So I just for one semester, I'm teaching a course there on Thursday nights. It's called Real Estate Entrepreneurship, and I'm writing it and teaching it all at the same time. But I love to teach. I do monthly, really almost weekly webinars, weekly podcasts. So a lot of content out there. It's all free. We don't sell coaching or anything like that. We have events coming up. We have an event January 10th. If you're on our email list, you'll get an invite to that big networking event. And then we have an invite-only steak dinner in November as well. So if you're an investor with People's Capital Group, or you want to learn about how to get invited to that steak dinner, click that link to schedule a discovery call with me, Aaron Fragnito, and we'll talk about your investment goals, see if you're qualified. And if you are qualified, we can invite you to the steak dinner there and show you more about the next offering we have as well. So together, Seth and I have completed over 250 real estate transactions, completed about $40 million for our company here, People's Capital Group. Here's the process to proceed. It's really quite simple. The first thing we do is set up that discovery call by going to peoplescapitalgroup.com or clicking the link in the chat there that I put for you. Once we do that call, you want to make sure you pick up the call at the scheduled time. It's about a 15 to 30-minute discussion, answer your questions, make sure you're qualified. We'll send you an email follow-up with the information to start your account on Syndication Pro. We'll qualify you there so you can move right into that software. Take a look at your investment dashboard. Take a look at the past performance here at People's Capital Group and future offerings as well. You have an opportunity to review all that information, digest it. There's webinars, summary of the offering. There's 140 pages of documents you can review. And when you're ready to invest, you can sign the e-docs there right online. It's a very easy process to invest and to remain invested with People's Capital Group. You can wire the approved funds to the account there holding the funds, foreclosing the general title company. And then, of course, once we close in the building, you'd expect monthly updates, quarterly financials, quarterly cash flow checks, and large lump sums upon the refinance. Upon that refinance, also about 90% of our investors reinvest in the next opportunity. So you can keep reinvesting that capital over time as it's harvesting more profit for you and roll that profit into new opportunities at People's Capital Group and build your wealth exponentially. But here's the problem. We don't have enough spots to service all of our investors. So if you want to get qualified and get on our investors list and jump in on this opportunity we're doing right now in Bayonne, New Jersey, or at least just learn more about it and have the chance to review the offering and get qualified, and therefore at least get our upcoming opportunities and make an educated decision on if it's a fit for your investment goals, then you want to schedule that call with me, Aaron Fragnito. Click the link. It's in the chat. That's the first step in getting qualified here. Doesn't mean you have to invest. It means you're going to learn more about what we do. We're going to get you on the list as a qualified investor. And that way you can at least review the offering in depth, learn more about how we help people invest in real estate, and maybe build your wealth in some great quality real estate here with quality experienced professionals at People's Capital Group. So I hope we connect. I hope we build your wealth together. And I hope you enjoyed this presentation tonight as well. But don't delay. We only really have a few spots left on the Bayonne offering. The deadline is in the next few weeks or so. So it is a very important time to click that link, get that discovery call booked. My calendar fills up very quickly. So do that tonight and let's connect and let's see if our investment goals align. Hopefully they do. Hopefully we can build our wealth together here at People's Capital Group. All right, let's see if we have any questions here. We don't tonight, so that's good. It looks like we had a lot of people jump on, which is always good to see. Usually if we don't have questions, that means I did my job properly, although sometimes we get some after we finish speaking here. But if we don't have any questions in the chat or the Q&A, I'll wrap up here for the evening. That's it for me, ladies and gentlemen. I will put a copy of this up on our YouTube channel and our website eventually as well, if you want to catch it again. And join us next week for Mailbox Money, a whole different presentation with a real estate coach. That'll be on Wednesday night at 8 p.m. of next week. And of course, we have that steak dinner coming up this November. If you want to learn more about that, let's schedule that call. Let's get together. But that's it for me tonight. Aaron Fragnillo of People's Capital Group. We enjoyed our presentation. Keep building that wealth. Thanks a lot.